And Tom, what a segue. Bryn's saying she's not ready to call the bottom, but you certainly are.
Well, I mean, I think all of those comments actually are valid. We don't have visibility. And I do agree the first half has been a story of economic misery, but we know the market's character's changed. And I think that's the signal we have to pay attention to, that the stock market, I think, is starting to respond and anticipate a turning point in inflation. And that's very similar to August 82. That's what we wrote about to our clients today, that in August 82, CPI was still 6%, still in the biggest recession since the Great Depression. Volcker wasn't even ready to give up the anti-inflation rhetoric until October, so not for another almost 8 weeks. But the stock market turned decisively. And I think one of the key points is that inflation-driven bear market was erased in 4 months. So you had almost a 3-year bear market that was completely recovered in 4 months. And I think that's what we have to be mindful of today, that I think companies had great earnings, considering we had a huge inventory correction, a 10% rise in the dollar, and 6 months of negative GDP, and yet 70% of companies are beating, and actually positive earnings growth for the majority of companies. So I would just say I'd give performance of businesses an A+ in the face of that.
Tom, let's dig into your call just a bit. You see the S&P ending the year at 4,800, about a 15% rise from today. What's the catalyst? Because certainly inflation, at least at this point, has not died down. We're seeing PCE at a 40-year high, CPI at a 40-year high. What is the catalyst for this move?
Well, for our fund strat clients, we're sending an inflation dashboard that really looks at 3 types of inflation before it shows up in CPI, including the alternative data, the commodities, and a lot of leading indicators. Those have all decisively rolled over. So I think when people talk about CPI being elevated, which is correct, that's the hard number, but it's already come down sharply. And in fact, by some measures, I'd actually say that leading indicators say for the next 6 months, month-over-month inflation will annualize under 2%. So, we could have half a year where people are going to start to say CPI is under 2. And what does that mean for multiples? I think that's what the 10-year and the 2-year have been telling us. And it would really be a very classic bear market move, a bear market end for the rally to be strong. I can't explain it, but I would suspect it has a lot to do with not only multiples expanding, but actually visibility improving. And if the dollar weakens and we got the tailwinds from lower gasoline and consumers, confidence improves, I just think all of this means stocks can recover pretty quickly. And I know people think markets were expensive at 4,800, but if earnings are 245 or 250 next year, it's not demanding to say markets can get to 4,800.
All right, Tom Lee with another call on inflation. I want to bring in the investment committee. Tom, I'm going to start you off nice and easy with Jim Liebenthal. He's bullish, too, just not as bullish as you, but he's also bullish. Jim?
Hey, good morning, Tom. I'm bullish. So if I'm saying you're more bullish than me, that's saying something. Here's my question to you. And I get your research and I love it. But when I hear the comparison to 1982, what I think of is the start of a 17-year bull market that was promoted by a lot of things, not only breaking inflation, but the Reagan years, deregulation, not only here, but also abroad. I want to make sure I'm understanding you. Are you saying we're embarking on some sort of regime like that of many, many years and many other powerful forces at work? Or is this just, hey, we're breaking inflation like it broke in 1982?
Jim, it's a little bit of both. I think that, the Volcker bear market, which was sort of the end of an inflation regime, but that was a 27% drawdown. We've had a 25%. And I think this is how investors need to appreciate it. When you're sort of breaking the inflation regime, markets can continue to recover to levels that are far faster than people expect. But you're right. I don't think we're going to be up 150% in 18 months like in 82. But I think the bull market that was in place because of the pandemic and the re-engineering and the millennials and the generational wealth transfer and the reshoring back to the U.S., I think those are all still intact. And I think that's what people forgot, that in this sort of 5 or 6 month bear market, investors got so gloomy, they forgot that there was a lot of underlying drivers that actually protect the economy, including the fact that U.S. households and corporates aren't even highly levered today. So I think the market is going to resume its rising trend, but it was interrupted by this huge inflation episode.